Tesla is challenged with a new set of geopolitical challenges. The decline of Sino-American relations could result in Tesla becoming yet another casualty of the ongoing trade war. As globalization falls to pieces, we can expect higher costs, lower margins, and additional disruptions to Tesla's supply chain soon. Tesla is also vulnerable to several significant geopolitical risks that could stall its long-term objectives. While the company is beginning to seriously consider how to secure its supply chains, Elon Musk's lack of complete focus raises the prospect of a further drop in Tesla's share price. Tesla delivered 100,291 units from its Shanghai Gigafactory in November, a 90% increase year-on-year. However, there are already signs that demand for new electric vehicles in China is slowing. This could jeopardize the company's long-term goal of increasing deliveries by 50% each year. There were already reports earlier this month that Tesla had stopped additional hiring in Shanghai and reduced worker schedules. In July 2018, Beijing increased tariffs on American vehicle imports to 40%, leaving Tesla with no choice but to raise car prices by 20%. A few months later, Tesla began producing vehicles in the new Gigafactory in Shanghai, allowing it to avoid the risks of reinstated tariffs and aggressively grow its sales. Tesla may become the latest casualty in the escalating Sino-American conflict. Tesla was already addressed by Chinese officials a year ago, purportedly for political reasons. There have been discussions about nationalizing Tesla's Gigafactory in Shanghai. The fact that 30% to 40% of Shanghai-made vehicles are exported exposes the corporation to additional tariff risks. The Senate Finance Committee has launched an investigation to see whether Tesla and other companies are using materials created by forced labor in China's Uyghur region. Many manufacturers, including Tesla, have supply chain exposure to the region, which might constitute a breach of the US-China Forced Labor Prevention Act. There's also the possibility that the White House will apply harsher chip restrictions in future. In China, this could jeopardize Tesla's self-driving capability. The good news is that Tesla is not completely unconcerned about the geopolitical dangers highlighted above. The corporation has been actively seeking ways to protect its supply chains by increasing production outside of China or its neighboring countries. According to recent sources, the business intends to establish a new manufacturing site in Mexico, expand its battery cell development lab near Fremont, and have TSMC develop its chips in Arizona beginning in 2024. However, the corporation would remain dependent on China for manufacturing and sales, and in the event of another Sino-American conflict, it is unlikely that it would be able to properly protect all its supply chains. The worst part of it is that, while globalization unravels and a new geopolitical reality necessitates firms thinking strategically about how to offset global risks, it appears Tesla is not completely dedicated to doing so due to its CEO's diversions. Elon Musk appears to have been focusing largely on keeping his new firm afloat after purchasing Twitter, by hunting for new investors, selling his Tesla shares, and playing politics, which is likely to alienate a significant section of Tesla's customer base in the long run. At the same time, his plan to pacify aggressors by giving Crimea to Russia and Taiwan to China may prompt great regulatory scrutiny, leading to a further decline in Tesla's stock price. Given all this, and the fact that Tesla's bullish story is dependent on the global order remaining intact, as it is the only way the company will be able to achieve its long-term goal of increasing production and deliveries at a 50% annual rate over the next few years. The company risks failing to meet that goal. As globalization crumbles, we may expect higher costs, worse profitability, and greater disruptions to Tesla's supply lines. Due to the issues that Tesla will most certainly experience in the future, all of this would cause it to lose even more value until it begins to trade in line with other automakers. With this kind of uncertainty, you're never too sure which stock to buy, which is why I've made my predictions for the stock market this year, which is the video you see on your screen right now.